What is up, everybody? How are we doing? Happy Sunday. Welcome to Market Kickoff with Nick4ATick. How is everyone doing? How was everyone's weekend? How was everyone's first, well, I guess half of a trading week of 2025? The first full week is upon us. And I think a lot could happen. As you guys know, we basically have been on holiday for the last 2+ weeks. So knowing that majority of desks will be back, hopefully this week, hopefully we see some volume return. Hopefully there is some decent trading opportunities. I think we might finally get kind of the real reaction move from a repositioning standpoint, from a, new year, new flows type of standpoint, and, how people adjust going to 2025 for, the Fed's dot plot and everything that was said from the December FOMC. And the reason I say that is because we do have the FOMC minutes coming out this week on Wednesday, as well as a gaggle of Fed speak that I'm sure will keep all of us on our toes and provide not only opportunities, but reasons to get out of trades, as we are kind of just waiting in the wings to see what and who might say something that either sends us up and to the right or spooks the markets, like Powell did on the FOMC press conference. So quick mic video check. Everything looks good on my end, but I will let the chat double check for me, as my partner in crime hasn't quite arrived just yet to give me the thumbs up. Hopefully Andrew jumps in here in a second so I can start compiling questions for you guys later. But how was everyone's week last week? How did we trade? Everyone have a good, we had obviously New Year's Eve, so the shortened week, and we do have another shortened week this week because we do have the observance of, President Carter's passing will occur. Is it the 8th or 9th? I think it's the 9th. I think it's Thursday, the day that the market gods decided to, do that holiday. There's always a holiday and markets close when a former president, passes away. So we will deal with that this week. I don't know the exact logic of is the CME closed or futures still open? I think they are closed as well, but it may just kind of be a weird day. I think some things may remain open for the most part. There is even data releases too. So Globex going in, I guess, Thursday night may get pretty weird and wonky. It is the 9th. Thank you, Andrew, and thank you, Andre. So yeah, Thursday the 9th, we will be taking the day and everyone getting another third week in a row of a little break from trading, which is a good thing. I think it's a good idea to always kind of take a step back, reflect, especially towards the middle of the week, end of the week. You just get a chance to catch your breath, and it may be an interesting start to the week. As I said, with all of those, 2025 flows and opportunities and banks and institutions, everybody kind of repositioning for the new year. What does that look like? Does that create volatility, or does it just kind of keep us range bound and balanced for a little bit as we kind of adjust for the new year? So that being said, this is Market Kickoff with Nick4ATick. So we are going to dive into some light planning for the week. On the big four, NQES, CL, and GC. CL actually giving us something to talk about for once. Thank God. We're finally out of that range, and we'll talk about that later. But we'll dive into the light earnings week that we have. Earnings season will be kicking off again here shortly in the coming weeks, but we do have a lighter docket of companies releasing their earnings this week. Nothing that's going to catch anybody off guard in the after hours or anyone that's really going to move the market, with the exception of maybe Delta. But, you know, they tend to kind of always kick off the early parts of earnings season, or the end, depending on how you look at it. But they're pretty much the only big boy on the docket for this week. But we'll talk about the news releases. We'll talk about the gotchas from our favorite talking feds this week, what day they're going on. But it's pretty much a cavalcade of Fed speak throughout the entire week. So if you missed them, this is your week. This is your Super Bowl. They are back, and they are back with a vengeance of speaking engagements, of symposiums, of conferences, and whatever the hell else they're deciding to talk about this week. I would assume anybody that's actually going to be giving remarks on monetary policy may have some tough questions as far as what the dot plot looks like, and maybe getting even more clarification into why they were almost potentially not cutting, or was a coin flip, or whatever it was that Powell actually said in that kind of tongue-in-cheek response to that question. But we'll get some more clarification between all of the different Fed speakers this week, as well as the FOMC minutes on Wednesday. So hopefully that should give us a clear path of what the early parts of January and into 2025 will look like. So yeah, as always, if you have questions as we're going through anything tonight, please throw it into the chat. Myself or Andrew will grab them, and we will get to them towards the latter half of tonight's session. So feel free to start throwing them in. We will not forget you. We will grab them and get to them later in the show. So to kick things off here, I actually had a pretty decent week. There were a decent amount of opportunities. As much as we were kind of in a wider balance on ES and NQ, there were a lot of opportunities. There were some pretty solid bidirectional rotations this week in the Nasdaq as well as ES. So there were some good opportunities. And if you bought this dip on Thursday afternoon, you're sitting pretty. I caught it with some options, but for the most part, my biggest failure of last week goes back to something we'll talk about later too. But the logic, I think Dakota talks about this too every once in a while, but the see profit, take profit. There's times when you should feel confident in entry, and I was long on Friday. It's on NQ, so we'll jump there really quick because I just want to talk about this while it's top of mind for me. My failure of the week came from a long around 276. And you guys know me, I cover usually 20, 30 points on the Nasdaq when it's moving like it was in the early part of Friday's session. There's no shame in, taking that profit, locking up for the day, and going to do something better with your life, going out and touch grass. But there was, looking at this volume profile as I was coming into my prep, that general area, the bottom side of it, we were kind of in this. If you kind of look at this and you see kind of what was starting to form out, we were breaking out of that range. So if the second we kind of re-cleared over 300, I should have felt pretty confident in holding that trade. And that would have been a hell of a trade to actually be holding. Instead, I scalped it for 20 points, locked it up, and called it a day and did better things. But there is that evil question, which is like, do you continue to trade like that? Do you scalp that way? Do you take 20 points and move on to the next trade or do something else? Or do you wish you held a runner? There was 2 opportunities this week that I was wishing I held a runner. So we'll talk more about that. It's something I'm going to try to continue to evolve in my trading in 2025, but sometimes in those opportunities, I needed to find a better system of my own system of just how do I cover trades and still be, profitable the same way I am, but in the session. So we'll dig in more there. Am I still live? I just noticed it's spinning. Are we still live? We still good? Guys, anybody in the chat? Still good? Stream cutting out and in. All right. Hopefully we're back. Everything looks good on my end. I'm back. All right. I think we were good. It was spinning for a half second, so we should be good now. It looks like everything's fine. All right. Let's keep going. Let's jump to ES and actually get into the prep here. So as far as, yes, just the biggest elephant in the room, my weekly pivot is going to be basically around 59.50s area. That is a larger option strike, going to bring us down to 5,900 on SPX. But as I'm zooming out and trying to find a decent spot here, that is a longer time frame, kind of value area low. And for me, basically would be looking for potentially the us to back test this kind of breakout back towards 5,900 on SPX, and then maybe go off to the races. For sellers to really show me something here, I guess is what I'm saying. I would love for them to push us down below here and go break these lows, go retest, and actually break the FOMC low on ES. I thought we were going to do it. We stalled. There potentially was a decent long there, but we didn't quite come down where I was really looking to kind of take out that low and then maybe get long. So I'm putting my weekly pivot a little bit lower this week. And the reason being, we had a pretty balanced week, but the logic is we closed near the highs. And when we close near the highs, I'm never going to kind of be the first person to be looking for a reoffer much, much higher or a little bit higher of the last week's range. I'd much rather see sellers actually show me something before I really wanted to get short. I'd much rather be a buyer back towards the point of control, 59.40s from last week, maybe even 59.50s. That excess area is possible before I would want to see that fail, before I'd really be digging my heels in to try to short this back down. And I put it a little lower too, just to kind of keep myself honest on looking for short opportunities in the early parts of this week, because I think it's a good week to kind of not necessarily sit on your hands, but let's see how the early part of this week develops with real traders being back at the desks and actually, potentially repositioning for the new year. So I would like to kind of see how that shakes out before I'm just jumping out to go either way. I would love to see, do we kind of do we come back down? Do we kind of retest this breakout a little bit on ES before maybe we move a little higher? Now, to the upside, I'd be looking for us to not only get back towards 6,000, but potentially even as high as kind of the 6,050 area. Where is it? Yeah, right in this general spot, kind of retesting even as high as the 60s. Now that I'm looking at this a little further, kind of retesting the value area high from even 2 weeks ago. But it could be very possible that, guys, we just kind of are going to be range bound between that area, basically these two areas, 59.50s to 60.60s, 60.50s type spot. As I said, as I'm kind of looking at this, I very much could see us balancing in the early part of this week as a decision is made. And if we start, getting very bullish, like sometimes January's typically from a seasonality perspective can be at times, I would like to be a part of that. You guys know I've taken 2 larger swing shorts on both of these move down, and I'm not going to push my luck. I think I timed those very well, and I don't necessarily think, the fact that we couldn't take out the low again on ES and maybe make a move lower. I mean, I know low volume, there were some sellers present last week, but I'd much rather be kind of waiting and patient for a larger opportunity this week. So naturally, putting my pivot a little lower, like I said, I really want to see something from sellers. This kind of goes back to the area we were trading in, or kind of at the bottom end of an area post FOMC, dump that we had, that we've kind of just been consolidating and chopping in. So that's basically the lower half of last week's distribution from a volume profile perspective. So for me to really get too bearish, I'd really want to see us break this point of control from the previous week before I'm really looking to short this back towards the 5,800s. And if I jump to the 4-hour, the area to watch if we do get any weakness this week, like real weakness, and kind of go retest these lows, is going to be the FOMC lows back towards the 5,800s, 5,830s, 5,820s. Yeah, in that general area. This, not the FOMC low, sorry. This is the election low. So where we kind of came down right on election night, or before that I think that Tuesday session before, and then we were pretty much off to the races from there. So that would be your next targets down if we can't kind of hold the general spot we kind of closed at. I almost set my pivot there, but who wants to set their pivot, right as basically where the settlement for the previous week was. So we are actually coming into the open in about 50 seconds for Globex here. But for the most part, guys, I think this is a good week to be patient in the early parts of it. Let things kind of develop before we, you really, I mean, I know I say this and every week I see people in the chat saying I'm already up like $2,000 or whatever it is. So I'm going to be patient. That's my style. That's just the way I do things. If you guys saw on Fast Markets on Thursday, I didn't take a trade for almost 2.5 hours. And then we finally got one and, had a decent scalp. But for the most part, you really want to see, I know my pivot's a little lower, but you want to see volume start to build above this 85 area that we are probably going to open at before you'd be really looking to kind of get bullish on a trip back up towards, like I said, that 60/50s all the way up to 6100s again. But until then, I have a weird feeling we may just kind of chop, consolidate, balance in that general area that we were trading in before we kind of flush down here. So we are opening. I don't think we gapped up. Let me look. No, we did gap up. Okay. Yeah. Trading about 59.92s so far. Let's jump over to the Nasdaq. The Nasdaq's trading at a very interesting spot. I got to zoom out. This 21,500s area, this is kind of this very high volume node that we've been talking about for a couple of weeks. If I was placing a pivot on NQ, it's going to be down here towards the kind of 350s to 300 spot before I'd be looking to really sell this down. But this area itself, all the way up to about 600s, is very interesting, just given all of the volume that has traded here on the Nasdaq in the recent weeks. It's going to be choppy. This is about 150 points of, just a bunch of pure volume at this point with, so many weeks that we've had. So I don't really, I don't really feel that confident in entering anything in this general spot. As much happier getting long back here towards the 300s, the 200s on Friday, but this area, it's just a lot of indecision. You've got multiple weeks of point of control there. You've got potentially resistance coming back where we retested this general spot and then sold back down, came up again, tested it, failed, sold down. So NQ is kind of at that decision point pivot spot where it could very much go back to 22,000s if we can start to build volume above 500s, above 600s. If not, we fall back down here, and the same thing we were talking about on ES. We start talking about not only the FOMC lows, but if you lose that, you're coming down into a ton of volume down here between 800s and, all the way down towards 20,400s. And as you guys know, NQ can easily move 800 points in a day. So there's plenty of opportunity to be had. I'm just basically saying I don't really have a ton of interest in kind of this 100 point range between 450s and 550s. I'd much rather be playing, kind of the highs here of 600s of us seeing to build volume, seeing buyers step in and potentially riding that all the way to 750s, 800s for longs. Yeah. Let's see. There was another spot I wanted to talk about. Yeah, I guess the question is with NQ and everything else this week with the Nasdaq is, how serious was this reaction? And then another reoffer a little bit higher towards 22,000s. If we came up to 800s, I could see us potentially reoffering again there if there was a decent opportunity to get short. If not, we're probably talking air horns in the early parts of January and us making a larger move higher. It's tough to call. Hence why I'm kind of looking to not only be patient this week, but, really be looking for the right opportunity. And once again, the reason I say this is we're talking about this high volume node, but we are basically just trading in a larger value area, for a week. So in theory, we could look back at this next week or another week and say, this is now just a very large value area. Like we were talking about, I think about a month ago when we were stuck kind of in this general range. And we kind of were just chopping, consolidating, waiting for some decision back in the end of October before we finally pushed out because of the election. But Looking back, I would not be shocked, just like we said on ES, that are we just going to continue to kind of consolidate between those 800s and kind of the 21,000s for a little bit until the market gets new information. And that could come this week. There could be more information on, what comes out of the FOMC minutes and all the Fed speak this week. It could just be, the way rebalancing and repositioning works in the early parts of 2025 that'll break us out of this range and actually give us the right opportunity. But for me to get too bullish too quickly, I really would want to see us building above 600s. No shame in getting chopped up at basically the point of control for the last 2 months, 3 months, going back to October. So just be aware. That's where we are right now, is basically the last 3 months of trading's point of control on the Nasdaq. Yeah. Ideally, if we fail here, your first chance to long this is basically back towards the bottom edge of Friday's range, which would be around the 300s all the way down to kind of the 250s. I don't know if I'd want to knife catch it again if we failed here, given this is kind of the top edge of last week's volume profile again. Another point of control, a value area low. So this is, like I said, definitely an indecision point in the market where it could go either way. It really is kind of that coin flip entry if you were talking entering around the 550s to 520s. So yeah, we'll jump over to GC. GC continuing to kind of be stuck in this balance range. We came up to the top edge of what we were talking about last week, which was along somewhere in the, I think we said 2630s to 2620s, potentially for a trip to the 660s, 650s, even as high as the 2670s. So you got that full move from the range play. We came up, failed around 2680s, and now are rotating back into that value area. So the same thing here as we talked about last week. I don't really have a ton of confidence wanting to enter at 2650s for longs. I'd much rather buy it a little lower back towards the 2660s, but gold just seems to be consolidating for the time being. It's pulling a crude at this point. Yeah, if you did catch a good short on Friday right around that 2670s, 2680s, that's a pretty nice trade. But in the middle of value, I just never love entering or, opening a trade, entering a trade. If I was, like I said, it'd be back down towards at least the 2630s. I'd want to see us maybe go retest the value area low of the previous week, the point of control from 2 weeks ago when we barely freaking moved on on gold. Before I'd be really trying to long. But for the time being, just like we've been saying with crude oil until last week, or the edges of last week, you play the ranges until a decision is made. And then once we do finally break the range, you don't really want to fade that move, because if you lose 2600s, you're going to go back towards 2550s, maybe even, yeah, I mean, that's probably where we're going. That's been defended so many times. I don't know how much lower we'd go besides 2550s, 2560s, but yeah, I'd be a buyer there unless gold is just melting down. But for the most part, you got to play the edges. Potentially, yeah, that was a great short here at the 2670s, 2680s. But as always, the more you kind of knock on the edges of resistance, the more I'd feel less confident about taking that range short back down for the rotation back into value. I'd much rather be I'd rather get stopped out trying to play breakouts at certain times after so many attempts to kind of break it to the upside and us continuing to hold those lows, retesting it again. Eventually, just like crude, it's going to break one way or the other, hopefully to the upside, because I'm pretty bullish gold still. I don't know what is going on with my DOM here in the corner. It's like not updating. Anyway. Yeah, pretty cut and dry. Nothing too crazy going on with GC for the time being. I would love to see this potentially rotate back down towards the 20s, the 30s to get long, but we'll have to see. This is just a larger consolidation area for the time being, so be careful if you're entering somewhere in this kind of 2650s spot, the 2640s. You just may get chopped up. You may get some indecision. Nothing may happen, and you may just get frustrated because if it's anything like this week from 2 weeks ago or Christmas week, I mean, you're stuck in like 10 points of range and not moving. So we'll see. Another shortened week this week. So if anything, like I said, I'd be looking for longs back lower, but there's nothing wrong with shorting the top edge of the range for the time being, taking the stop out if we do finally break out, because then you at least get a good directional trade after that. All right, let's jump into everyone's probably favorite asset this week is going to be crude oil. We did it. I'm gonna send an air horn for crude just for finally breaking out of this multi-month consolidation that we were in. And now the question becomes, where do we go? I don't know. I think we said the highs back up here towards 75, 76s at the absolute extreme, but we have just been going up and to the right since finally breaking above 71s. Thank God for that. There's finally going to be trading opportunities in crude, at least for the foreseeable future. God knows I probably just jinxed it and we're going to fail here at 74s and fall back into this range. I say that as a joke, but also the logic would be there's going to be potentially an opportunity to short this back down towards retesting the breakout, as well as, longing a potential attempt back towards the top edge of this range. I don't know if that's going to come this week, next week, in 3 weeks, who knows? But the logic is we may go back and retest this breakout area in the 71s to 7150s, maybe even 72s. Most likely somewhere back here in the 72s as I'm looking at this. I would not be shocked to see somewhere between 72.30s to 72.70s kind of being a spot that buyers may re-step back in to try to push us higher once again. But you do have to be aware of a falling knife back towards 71 with any sort of news or anything that's going on that could potentially, or not even news, but even just whatever it is, any sort of weakness in crude, you could very much go back and retest this breakout completely. And there could be a very good long there, but for the most part, I would probably wait to see if it kind of settles, consolidates a little bit at the top edge of the range before kind of continuing to move a little bit higher. On the short side, I mean, where would you potentially look at reoffering this if you were trying to play that? I don't know why you would, since we are talking about breaking a multi-month consolidation. I don't think yet you'll want to short this personally, but you guys are going to do your own thing. So if you were, I'd be waiting for at least the higher side, not the higher side, but I guess the lower sides of 75s, kind of the top edge of this value area here going back to October, before I'd be even attempting or thinking about wanting to short this breakout. I have no interest in doing it. As I said, I'd be looking for a trip back into those 72s to get long with the breakout. But if you like to live dangerously, that's probably your first attempt, is somewhere in the 75-20s. But thank God we did it. We finally have broken out of that range. Look at this. Look at how ridiculous this was. 71... Yeah, 71s, 7120s down to 67s for months. I don't know if you were trading that, good for you, but maybe this is finally the breakout. And where could crude go if it were to get above that 75, 76 spot? Let's see. I probably have to go back a ways. Yep. I'm sure there's somebody here that says there's a trend line that we're probably very much at the top of that we have to get over before we can continue. I would not be shocked if I was to draw that. I mean, we might be breaking out. Let's see. No, that's pretty much at the top edge of this 4-hour trend if I'm just eyeballing it. So yeah, there's a chance this could reoffer in this general area just based on trend lines, because sometimes that's just the way it is. But if we were to make that move higher, obviously the first place I'd be looking to, peel some off is going to be 75 40s, 75 50s. And then probably your high upside is going to be back towards the 77 50s, 77 30s, to really get back into kind of, now we're consolidating, going back to the early parts of the summer where crude was trading around 78s and 79s. So If we can hold this breakout, that's probably where we're going. Back up towards the mid 77s. If I had to guess, if I was a betting man, that's where you probably are taking the bulk of that position off if you were, holding it on a swing time frame. Oh, thank God. Hopefully we are finally out of this range. If we fail this week and fall back to like 70, I'm going to cry. I probably jinxed us, guys. Just FYI. Just ruined it for everybody. All of our crude bulls. All right. What's the S doing before we jump over to data? Still just kind of sitting around that 92 spot. Okie dokie. Let's jump over to earnings this week. So for the most part, going into this week, unless you're still holding Tilray from 2020's moves, the only thing that really matters on this list, or that's going to potentially offer, any sort of market moving activity, is just going to be Delta before the bell on Friday. But given how much the airlines just don't seem to move the market, with the exception of even Boeing these days, I don't place a lot of weight in any of these to actually provide any good trading opportunities, or even real, if you're play earnings releases as far as stocks and options. I mean, who knows, unless you're actually following some of these smaller companies at this point, where good opportunities would be. So Delta would be the big one. Tilray, obviously, if you are in or a, avid consumer of any stocks in the medicinal or recreational marijuana space, you're probably still watching and paying attention to Tilray. So not a whole lot going on this week. Earnings season will kick off shortly in the coming weeks. But for the most part, we are kind of still winding down with a couple of the names before we get some of the big boys and the big banks back in rotation. Seeing a lot of chatter in the chat that there may have been some issues with Topstep X, guys. As you know, Topstep always makes it right. If there is an actual issue, hopefully you recorded a trade. I don't know why sometimes you guys are trading the Globex Open. Sometimes things just happen. So they, as always, they do make it right. They do fix everything, but I had no issues with Topstep X, and that's what we are looking at for this prep. So no issues on my end, but if you did, record it, reach out to support. They'll hopefully make it right. They'll make it better. They'll fix it. They'll get you squared away. Don't blow up the chat over it. Hopefully everything gets resolved. All right. So going into this week, as I said, the biggest change for this week is going to be all of the Fed speakers are back. We have Cook. We have Barkin, and a bunch of others throughout this week. But the big ones going into tomorrow, we do have Cook speaking before the bell. We've got PMI, S&P Global PMI. Going into Tuesday, we do have Barkin talking. You got ISM Services PMI. You've got Jolts. Business activity, the 10-year auction. There we go. I was trying to find it. We do have a 10-year auction on Tuesday at lunchtime. So in the event that you are holding trades at lunch, with everything going on in bond land, and with all the Fed speakers this week, and with the Fed's dot plot, and with the fact that the 10-year tends to be the one that is really market moving at times, just be aware, lunchtime on Tuesday, if you are in a trade, it may get a little wonky as those auction results come out. They typically get released, or they happen at noon, but then the results of the auction usually come in about 2 minutes later, and then the market gets a nice algo reaction to whatever the results were. So sometimes it comes out and basically turns into like 12:02 p.m. Central Time. You get the actual kind of reaction to the results of the bond auction. Sorry. So please keep that in mind if you are going to be trading around lunchtime on Tuesday. Going into Wednesday, the biggest one outside of the long bond auction is going to be the FOMC minutes at 1 p.m. Central. As always, this is it, some weeks, some months, I feel like it moves the market. Sometimes it's a non-event. This one may be more of an event, just given the reaction to the Fed's dot plot and what Powell said in the press conference in December. This might be one that people are paying a little more attention to and potentially reading between the lines on what was talked about, how they're feeling, what the dot plot really, how they kind of came up to their decision and why they actually did cut, even though they were almost apparently not cutting. So I'm very curious to kind of see this and see the reaction from the market. I know now that real traders are back, as you guys know, we had FOMC, then we kind of were on a longer, 2-week holiday, if you will. So you kind of got an initial reaction and then we just went low volume. So now that people are back at their desks and we get this released and we have all these Fed speakers this week, I would expect positioning to potentially change, whether it's bullish or bearish. I have no idea, but let's see what the reaction looks like to FOMC's minutes this week and, what some of the Fed speakers are going to be talking about this week. On Thursday, we won't be trading, but we do still have jobless claims. We do still have Harker speaking, Barkin, Schmid, Bowman, and a bunch of others throughout this week. So they're back. They're here. They're going to get us stopped out on trades. They're going to provide us with some opportunities, and they're going to provide some thin markets probably as some of them are talking. So take note at some of these times. Obviously, none of us are going to be trading on Thursday, but do be aware that there are a number of Fed speakers this week. So as you are trading, just keep them in the back of your mind. We'll always remind you on TopstepTV as they are coming close or stepping up to the podium or sitting down at their news conference or on CNBC or wherever it is they are talking. So like I said, sometimes it doesn't matter because they're not talking monetary policy, but it is still good to note who is talking and, just be aware if you are still holding positions. And then Friday, when we are all back at our trading desks, we do have non-farm, we do have the unemployment rate, and everyone's favorite post-market open, post-New York open algo spasm is going to be the Michigan consumer sentiment preliminary, the 5-year inflation expectations, and all the other good ones from our friends at the University of Michigan. So I don't know why this always moves the market the way it does, but it always does. So do be aware, 30 minutes after the bell on Friday, you do have that one and it will stop you out. If you use 10 to 15 or 20 point stops on NQ, that doesn't matter to the Michigan consumer sentiment numbers. The reaction always is pretty wild initially, and then we usually settle back down basically where we were trading. But I've been stopped out enough times forgetting about this one that I always like to bring it up to other people because you don't think it should matter, but it does. And that's the following week. So that's pretty much it. As I said, the usual data releases as far as jobless claims, as far as some of the PMI numbers, jolts, and a gaggle of Fed speak. So, and FOMC's minutes. So pretty large week. And we do have, he spoke earlier. Never mind. Yeah, we do have a lot on the docket this week. Obviously, Thursday, the markets will be closed, so we will have to adjust based on that. Given all of these releases on Thursday, when Globex opens Thursday afternoon, Thursday night for some of us, you may get a gap is all I'm going to say, just based on the fact that we had data releases, we didn't trade, you had Fed speakers, you had all these things going on. The market may be a little weird Thursday evening in the early parts of the, and into the early parts of the Asia Open. So head on a swivel this week, guys. Alrighty. On the options front, you guys know I always like to give you a little peek into what we are seeing as far as the gamma exposure for SPX options, since they, as much as you maybe don't want to believe people, they do make up a lot of the day intraday. Zero DTEs do tend to be over half of the volume now, and that's a very good way to have markets function, but it's not going anywhere, so we learn to adapt, hence why we show some of this information, or I like to at least let people see what I see sometimes behind the scenes as far as options data, because these larger pools of liquidity on the gamma exposure front tend to act as support, tend to act as resistance, tend to have price gravitate towards it at times. Some weeks it matters, some weeks it doesn't. Some weeks the 0DTEs matter and some weeks they don't. It just really depends on kind of what's going on. When you have situations like FOMC and nobody is positioned with options for the downside, you get very violent moves like we saw post press conference or during the press conference with Powell. So keep in mind the large strikes. This is Friday's data, the data at Friday's close. So we are still seeing a very large skew to the negative gamma exposure side back towards 5,900. When we take into account the gross gamma, so looking at all of the calls, puts, positive, negative gamma exposure, the biggest round number is still going to be the 1,000 mark at 6,000 on SPX. So that would be roughly 60 50s, as I was saying earlier, why I could see us potentially gravitating back up there this week if we do get a bullish move. I'm not saying where it could potentially cap, because who knows this week as positions change, as people adjust for 2025 with real traders back. But for the most part, this is still the big glaring magnet in the room that you do need to be aware of. The other one to keep in mind is, given even the lighter volume the last 2 weeks, you have started to see 5,800 SPX. So this would be roughly kind of towards last week's lows, maybe even a little lower than that now, given the spread. But 5,800 SPX would be roughly 5,850s. Yes, so just below pretty much last week's lows is going to be, I guess it'd be closer to December's lows. Yeah. But that is continuing, 5,800 is continuing to grow towards the negative gamma exposure side. So as we start to see this shift, you guys remember when we were making new all-time highs in the early parts of December and in November, you started to see that those pools of liquidity grow towards the higher strikes. And I did say it matters until it doesn't. So people were getting very bullish at the all-time highs, continuing to have call strikes, with exposure to higher and higher numbers. But as it continues to grow towards the downside, there's two things to keep in mind. People are getting a little more hedged, including market makers. And also people are positioning to downside. And when the market is positioned for downside, you kind of rarely get it. Or if you do, the moves they don't stick at times. People are well prepared for it. So I did even see the put exposure, or the put call ratio, was getting a little skewed. Nothing crazy just yet, but was getting a little skewed for downside. So when that happens, you usually get a nice little, pop. I have no idea if that matters this week, but it's just something that I'm keeping in mind, because when you had all of that skewed to the top side, that's when you saw us fail at all-time highs and rotate lower. Yes, FOMC is what sent us down the elevator shaft, but it doesn't mean it's not true to, when people get super bearish. It just gives us an excuse to potentially rally, and then they have to cover, or they take those hedges off for downside. This could be hedging for the minutes. This could be a lot of things. Who knows? But I just always, the market hates bears. It always seems that way. And as you guys know, we just casually always go up on a long enough timeline. So, if you're getting short, I do think, there could be more weakness. It doesn't mean it's going to happen this week. Doesn't mean it's going to happen next week. Doesn't mean it's going to happen in January. But the more people get positioned for downside activity, the less likely I always feel like it's going to happen. So just be aware. Keep that in mind. We are growing that gamma exposure to the downside. We'll see how it evolves in the early parts of this week as positioning changes. All right. Sorry. I don't have any water up here. I kind of need some. Should we get to some questions? Feel free to start throwing them in the chat. I do have a couple here, but feel free if there's something you want me to go over in more detail or talk about further, I am happy to. So throw them in the chat. I do apologize if you've thrown questions and we haven't gotten them, but feel free to throw it in again if, we're going to start answering some of them here. The first question is the one we get every week. Can I share my volume profile settings? Sure can. So for visible range and the fixed range, I keep it very basic. So I moved to ticks. I keep my row size at 4 for ES. And I keep my value area at 70%. And then I change the colors of the value area so that you guys can visually see exactly where that, value area highs and lows actually are. You can see kind of how I have it set up. I keep the point of control line red. You guys can you can visualize and visually see yourself where the point of control is. So if it just becomes too much noise on your chart, I keep it on there for you guys just to, have an idea of where the most volume in the previous weeks actually took place. And then when you get, larger buckets of volume profiles, value areas and point of controls, you can start to kind of visually see where these balance areas actually are. So those are my settings. It's the exact same on visible range. I don't change anything. Keep it there. On NQ, you could probably go to 5 points, 20 ticks, 16, just it kind of depends on your style. I just like to keep it pretty clean, but it's really up to you. My settings are pretty basic, but just a good way to visually understand the auction. Does the ES love whole numbers like NQ? Yes, it does. A lot of the time it does. And part of that comes down to it'll change throughout. Part of that is because of options at this point, but it does. The big round numbers, as stupid as they are, I always kind of believe don't place your stop at a big round number because it will get tagged. And that could be a 50s, that could be 100, that could be a 0. It just really kind of depends on, where we're trading, what the spread is between ES and SPX at times. But I would say the market does love big round numbers. It's a weird psychological thing sometimes. ES tends to respect them more than NQ does. I don't know. I guess then you see sometimes the NQ likes to respect like the 20s and 80s between every 100 points. That, there could be a rotational statistical anomaly there. It's just as far as the way it typically, how rotations kind of work between buyers and sellers when you get momentum each way. Maybe that's got something to do with about 60 points or something, but ES tends to, like I said, respect it a little bit more as far as big round numbers. So my advice is don't place your stop at a big round number because it usually will get tagged. Sometimes it makes sense to do it a couple ticks lower, a point lower or something. Just tends to do that. Yeah, ES has been a little more volatile lately and not respecting levels. Part of that, guys, is how illiquid it was at times the last few weeks. And one of that is because of kind of the reaction of FOMC. Things get a little wonky. The spreads get a little wider. And then when volume gets thin, you just don't see the same level of liquidity and on order book depth and things like that. I think order book depth last week at times was like 26 to 28,000 on ES, top to bottom, which is not great. So when it's like that, yeah, it can trade a little thin and price can be a little jumpy. And when you only see 20s to 40s on the ES DOM, I mean, that's going to suddenly start moving like the Nasdaq does at times. So just when it gets like that, I think this week we should see volume come back. But when it's like that, size down, widen your stops, trade micros, the other things that you can do if you want to have skin in the game without risking tons of dollar values. I don't necessarily change a lot of the time the way I trade because I actually love the volatility and I love kind of when we move like that. I don't love the poor volume, but I have no problem with sometimes the spreads and, just respecting my own levels and prep and understanding where reversals may happen and where breakouts may happen. I'm trying to get better at breakouts. But for the most part, most people would do well sizing down. If you're an NQ trader and it's getting a little wonky, maybe switch to ES. The way you can read the speed of the tape on NQ, even when it's a little more liquid on ES, it might help you a little bit, not feel like you enter into a trade and it's already 20 points against you and you're stopped out. Versus yes, you've just got a little bit more time to kind of let it develop. How many scalps do you take on a really volatile session? It really depends. I think 2 trades on Friday. I took 1 trade on Thursday, and that was pretty low volume. I did take an options trade on Thursday as well towards the end of the session. But sometimes if I hit a scalp and it's pretty illiquid, I'll chalk it up as a good day and come back the next session. There's no problem with that. I'm I'm on a 5-day winning streak after a 4-day losing streak. So I'm pretty happy to trade that way. I've come to learn, for me, when I don't overtrade, when I don't take that extra next trade, my P&L and the accounts tend to grow. Like I just basically, like, I don't push my luck. I do believe, you are, like, your statistics do matter. And I have a higher winning trade percentage, but me hitting that, I think I hit like 60 to 70% of my trades, in any given time period. But I have learned if I get a good winner, maybe a second winner, and then I push my luck, that 30% can come back to bite me real quick. And then I lost a trade. And then I maybe am forcing the next trade because I'm not taking high probability setups as we get later in the session. Early part of the session fits my style of scalping very well at times, where I can get 20, 30 points on the Nasdaq, 5 to 10 on ES pretty quick. And as the session slows down, I think my statistics will start to drop. My winning trade percentage will drop because I need a little bit of that movement, that volatility, for just kind of the way I trade sometimes. So for me, if I have taken more than 5 trades, I should probably be done for the day. And I don't mean round trips. I mean individual trades, entry, stop out or exit, and then another one. And some of those could be a scratch here and there. But if I take more than 5, I'm probably having a bad day. I did just see this one pop up in the chat as I turned my head. Do you set your visible range, do you set your fixed range volume profile based on certain start and end times? So if you're using Topstep X, you need to manually draw your fixed range. I just do it weekly before we come on and sit down with you guys. So you can do it for the week. You could draw it all the way for the month. So you could just jump from basically the end of December, like in the middle of last week, all the way to, December 1st and get the full month of December volume profile. So on Topstep X, you got to do it manually. If you're using TradingView, it's the same indicator basically, but you can define what the, 1 day, 2 days, 1 week, 1 month, whatever it is you're looking to do. I just use weeklies. And then on other charts, I don't really use a daily volume profile like the previous days, because I personally believe I'd much rather use like the previous week's, value areas at times versus using like the previous days. I can visually see previous days a little easier. And I don't know. I guess in some ways, like I'm much more of a rotational trader based on longer time frame volume profile than I am on shorter time frame, just because there's a lot of things that I think can affect that and other things you need to be looking at outside of just the previous day at times. So it's really up to you, but I draw the weekly ones here for you guys. And then when I want to see a certain time period, I can use the visible range one. So if I wanted to just see like, part of the Friday session, I mean, this is a very bad example, but you see what I'm saying. I have to jump to, like a 1 hour. And then I can start to see kind of the previous day, previous session, whatever it is I'm looking for. But really up to you. Last week was balance, so bad example. What indicators are you using? In Topstep X, I use a VWAP, a 5-minute EMA, or 21 EMA on a 5-minute. Usually I don't really care about what it looks like on the hour. But this is called the big green line. I didn't come up with that, but it just is a good way to see if you're staying on the side of trend on like a 5-minute chart for a single session. And then I use the Topstep daily levels. I only use the value areas from the previous day, and I use Hoag's weekly kickoff levels because he's got a good secret sauce that I do like, and it aligns with other things that I do kind of visually and manually myself. And then my volume profiles there. And then the other ones you guys may have seen on my old, kind of motive wave charts are going to be some of the delta information. Delta by price is kind of a big one that I use. But yeah, that's pretty much it. The rest are somewhat, basically just MGI levels that I establish. And then my price action is very much based on delta based on whatever time period. Could be the session, could be candle by candle. So really up to you. I have delta candles. So it repaints the color of the candle based on, positive or negative for whatever time period I want to look at. So I don't have to read time and sales as closely. SPX options data gives you levels for yes. What about the Nasdaq? Which options data do you think to look at for the Nasdaq? So it's a double-edged sword with NQ. I believe you are better off just because they trade in correlation most of the time. SPX levels for ES and then leaning into ES levels to trade NQ. Obviously, there's a margin of error there because I get stopped out doing that sometimes. But for the most part, you can also use the triple Qs options and have them translate to NQ and how it would kind of look based on the same types of areas. There's a little bit of some nuance there. The reason I say that is because the triple Qs options compared to the SPX options on intraday, like 0DTEs, the volume is night and day. They're not close. SPY and SPX do a significant more amount of volume as far as 0DTEs than the triple Qs do. Qs get a lot, but it's not quite the same level that I would put that much confidence in them. Now, it does still work. It's just you're not dealing with as much volume. So part of that data gets a little bit skewed and wonky. I don't personally look at it day in and day out. I do look at the Qs options, but as far as translating levels to NQ, I just rather lean into, ES levels because of the correlation that they trade in majority of the time. But yes, you can use triple Qs. You could look at the big strikes on the 0DTEs, look at the way it's trading, look at those big levels, and compare that to NQ. There are services as well, things like GexBot, Spot Gamma, others that will also translate the triple Q options chain to NQ levels with gamma exposure and things like that. They're all paid services though. The free way to do it would be to understand the options chain and in the triple Qs and translate those big strikes to where you're seeing that on the charts. So there's some nuance there, but if you want it done for you, you got to unfortunately pay for the data and the information from one of those other providers. Are there any good videos on how to use volume profile to trade? There are hundreds. There's a lot of good traders out there that use volume profile. There's some bad ones too, but there's so much on YouTube. That's how I first learned before I started talking to other traders that really knew what they were doing and how to kind of dissect it. But that's the first place to start. There's a lot of good concepts. If you have no idea how to use it, any basic course, I've done a quick, 5-minute deep dive into it in the past. I'm not gonna do that tonight, but there's a ton of good content out there. I am a big volume profile guy. There's a few of us on the TopstepTV team that do talk about it and do use it. But as far as getting like a massive deep dive into it or just a good overview, there's a ton of free content on YouTube that will give you the understanding of how it kind of works from a volume by price perspective. But the simple answer is we spend a lot of time, and jump back to 1 hour. The simple explanation is 70% of the last week's volume traded between 59.25s and 59.78s. So we spend majority of the auction inside of value areas. We do not spend a ton of time in low volume areas like these low volume nodes. And we either are going to balance or we're most likely going to traverse low volume nodes to another area of higher balance. So the basic understanding would be, without doing this, you either fade or you play a breakdown in a low volume area or a breakout to an area of higher volume. It's a super simple example and there's a lot of nuance to that, but that should get you started. That's a super basic way. And these red lines are going to be where the most volume in that whatever time period traded. So if you are curious, if you want to use it, it's something I don't use to kind of truly trade off of. I build levels off of it. I look for confluence of like a value area low with something else I'm seeing in the auction or something else I'm seeing on a longer time frame that would give me confidence to start to build along in this, value area low here for that breakout or traverse of that week's value area. So there's plenty of different trading opportunities or, ways to use it to enter trades or to take profit in trades. But that's the whole thing. Like there's a lot of nuance and there's different ways to use it. So check YouTube first. I'm always happy to do a quick deep dive or give you guys an understanding of how I've used it, but there's a lot of things that we could talk about. We could really go down the rabbit hole, but there's a ton of free content out there, I guess is what I'm saying, to at least get you started on how to use it. Nick, do you use Bookmap and what's your opinion of it? I don't use it day in and day out. I do look at it on random screen in my setup at times. Some days I use it and look at it. Some days I forget to even throw it on. So I think it's a good tool, but it really comes down to your level of experience, just, reading the order book and understanding, price action. It's just another tool. Is it absolutely necessary for you to be successful? No, you don't need it. There's a lot of other ways to see the information. It's just a different way to visualize kind of order book depth and what's happening as far as buys and sells and, time and sales and things like that. So is it 100% necessary? No. Is it a good tool that can help you continue to kind of grow your knowledge of what's happening in real time in the auction? Absolutely. Are there other ways to also do the same thing? Yes. Do I like Bookmap? Yes. Do I use it every day? No. Is it helpful? Yes. It just really depends on you. But it's just like that in a weird way. Like you have level 2 data. It's almost like level 2.5 data, if that makes any sense. You can kind of just see a deeper picture of the same information that you could see on a DOM, but now in a much more visually, aesthetically pleasing way to understand what's going on in the auction. So I think it's a good tool. Is it necessary? Absolutely not. How do you set it for weekly? Are you talking my volume profile? If you are, you need to grab fixed range and you basically just click and drag for the previous week's candles. That's all. Super simple. If you wanted monthly, you got to draw it. Topstep has not released the automated one just yet. Hopefully that's coming and will make my life easier so I don't have to draw it, but it takes 5 seconds. It's not like it's a first world problem, I guess is what I'm saying. Sometimes I'm just so used to my automation of some of these things, just spitting it out. Every once in a while I'm like, I got to draw this and it's going to take 10 seconds. So hopefully that's coming. Hopefully we get new indicators, other things in Topstep X soon. I know they're going to be adding more and more. So stay tuned, but for the time being, you got to draw it. Doesn't take very long. All right. So that is all the questions. I will pause for another second or two and see if there are any more. If not, I'll let y'all get out of here and enjoy the rest of your Sunday. I've been talking for a while and I need a drink of water because I forgot to grab one before I came on the air. But for the most part, guys, this may be an interesting week. Volume is back, hopefully. Hopefully there are some good opportunities. There are a lot of Fed speakers this week. There is the FOMC minutes. I want sellers to show me that we are going to get real weakness into January before I'm really looking to get short in this market. I have been punished enough times in 2024 to want to let this kind of develop and sellers really show me their hand that they actually are serious. And the reason I say that once again is I'm putting my pivot a little bit lower back towards 5,900 on SPX because I would really want to see us break down that options level before I got too bearish outside of scalps and little things here and there that I'm seeing in real time on time and sales. I don't have a lot of confidence in bears. And the most of last year is to show for it. I mean, we get these violent moves and V-shaped recoveries. So before I got really looking to short this thing back down toward the election low, I want to see sellers show me what they actually have and that they're not going to then get a V-shaped recovery in 30 minutes later after they kind of push us down to the previous week's low or something. So you could also probably put it a little higher. I still was sitting there debating and putting it somewhere in the 80s, kind of last week's value area high and 2 weeks ago's value area low. There could be some indecision there around 59.80s, but for the most part, I just am sitting here like I just don't believe sellers. I know there was low volume, but it's still like each time they just leave the door open for this move to happen. So pivot's going to be a little lower. There are some moving averages to the downside and to the upside as well. So this is a week, like I said, it's a good idea to be a little bit patient. Let's see what the big boys actually want to do in the early part of this week before we really start slinging any size or trying to catch a big trade. I do weirdly feel like we could just consolidate, at least in the early part of this week. But we'll have to wait and see. That's the prep. That's the idea. Let's see if Crude continues to break out to the upside. Let's see if GC is going to rotate all the way back towards kind of the middle edge of that value area for the last few weeks. And we'll have to see what equities do. Could be an interesting week as we kick off the new year with all of traders back and volume is back, and we're going to have some fun. So that is the idea. Hopefully this has been valuable for everybody. I hope everyone has had a wonderful weekend. Have a good evening. Enjoy your the rest of your Sunday evening. I don't think things look good for Joe Burrow and the Cincinnati Bengals. I think the Broncos were up 21-0 when I was coming on the air, so their playoff hopes may be dead, but I don't know what the score is. But I hope everyone has had a wonderful evening. I will see you guys later this week on TopstepTV. Tune in to Coach Dakota shortly here after me around 7:30 Central. He will be on, hopefully giving you guys a different view of the same idea of the prep going into this new week, maybe even a trade or two. But please tune into his show for slow markets later this evening at 7:30. And I will see you guys later this week. Have a good evening. We'll talk soon. Take care.